Did the Fed do the right thing? What about those jobs numbers? What's up, everybody? Welcome aboard. It is Bubba's Bottom Line for Sunday, November. How about that? It's already November. Thanksgiving's 4 weeks away, 3 weeks away. It is November the 3rd. And of course, each and every week we discuss what kind of happened during the weekend, some of the events. And of course, this week will be was the Fed. And that was, I thought that might be what we were waiting for. It wasn't. It did not free the volume. It did not free the volatility. But again, it did. It was something that the markets were looking for, which actually had it perfectly priced in, ready to go. So we'll see. And you'll hear more about the Fed in my commentary later. But in the meantime, they did as expected. Okay. Now, again, did they do the right thing? We'll talk about that later as well. In the meantime, we had the jobs number on Friday, and by all accounts, it was a blowout number. Again, I remember much bigger numbers, but of course, I'm old and senile, but I do remember much bigger numbers back. But again, according to every source, they were blowout numbers. So again, I won't say they weren't. They were what they were, and again, they were interpreted. And of course, the markets made new high. Well, the Dow and the the NASDAQ and the S&P made new highs last week. I'm sure the rest are following as we continue in this slow, dull grind, as we continue to ignore any news that might be slightly negative. And again, I'm not preaching negative news. As a matter of fact, our positions were long. I do see, as I have said almost each and every week, that I think we are in the very early stages of a recession, which doesn't mean anything. And it doesn't mean that the markets are going to change. And one thing we always have to remember is that the economy and the markets are not necessarily linked at this given time. Eventually, the final blow will play out usually through the markets. But initially, we don't know. And we don't know how long it will take to fully develop. Okay? So again, we've now got manufacturing, data 3 months in a row, negative reports. So that is never a good sign, but of course, the street continues to ignore it. The street doesn't care. So again, you have to remember that your opinion, basis the data you're getting, is not important to the opinion of the investors or the traders and the market makers on the street. Okay, that is where the money comes from, because that's why we always talk about markets always come down to price. It has nothing to do with the data. The only data that is ever a major event is when it is the black swan of unknown. Okay, something that we would not have ever expected. Again, I hate to bring it up, but it was a terrorist attack, obviously a black swan event for the markets. But things like that nobody can price in, that nobody has an idea, that nothing could change, and that because the rest of the data is already well priced into the markets. So I think is one of the questions we want to ask is the Fed just getting warmed up? I mean, are they going to fire in? And of course, I will talk about more of that as well. But if you look at the overall picture, okay, Apple made a new high. There's many new highs, but the other tech is not necessarily participating as you might expect that they would. But again, we have to remember that the markets are still going up. They're still going higher. So again, I think we have to look at it for what it is and for what's happening. And I think that it's interesting. Okay, as we go through, as we're in the election cycle now. So again, I don't think that we will see a full-blown recession until after the election. Okay, because again, I don't think that President Trump will allow it. I think he will make enough deals to keep the economy strong. I obviously, if you've watched any of the left stuff that's been going on, the impeachment inquiry means nothing to the markets, and it shouldn't. I mean, it never did. It didn't mean anything during Clinton. Okay, it has no effect. Okay, but basically, to me, this was a way to get rid of both Biden and try to get rid of Trump. But I think they're going to fail miserably here, and I think it's going to cost them any real shot for the election. Of course, the whole deal here is I don't even know if that group of whatever it is now, what's left. I know Beto O'Rourke dropped out, but we might not see the actual final candidate. He or she may not even be there yet. Okay, so we'll see how it plays. But again, I think when you look at some of the details, like the Bernie Sanders, who admits freely that there's going to be a lot of tax hikes if he gets in and his health plan, and Elizabeth Warren, who won't admit that there's going to be tax hikes. I mean, obviously, this world health care is I think is a joke. Okay, I think that the Medicaid or Medicare for all, I think, is a joke. We already have enough trouble paying for the programs that we have in place. Okay, it's got to be paid for. Somebody's got to pay for it, and you know who's going to pay for it. We're going to pay for it, and not that I have a problem with that, but why don't we? The real story here would be, why don't we open up the market to all the insurance companies to compete in all 50 states, and you won't have ridiculously high rates. It's very similar to the cable companies. Okay, again, when you only have one choice or two choices, the price can be rigged. Okay, but when you have multiple choices, those who want to get the business will figure out a way to price it appropriately. So when you look at healthcare, one of the reasons it's so expensive is not because of all the costs and all the ridiculous talk about what drugs are and all that. It's because they have no competition. So basically, if you and I are competitors, but we're the only two allowed in this market, and we say, well, we're going to keep prices higher, make more profits, that's what's going to happen. All right. So again, I think that's more of a criminal type of act, because it's price fixing. And I think they are price fixing, as do the cable companies. Where I live, I only have my choice of one. Okay, I can't get others. Others have a choice of two. But there's a number of cable companies out there that we should have an opportunity to let them bid and let them work on price. It would be the cable TV would end up being very much like cell phones. Okay, if you remember cell phones back in the day. I'm not talking about the radio phones, but when cell phones first started to play, in the early 80s, okay, I think time was $1 a minute, and you were very careful. You had only the phone in the car. You didn't have all the data. In the meantime, you didn't want to get too many calls because you didn't want a $1,000 bill, which I got once. But in the meantime, okay, now obviously prices have come down so far, and basically, for $40 a month, you can get for whatever you want, talk forever, get the computer, the whole deal. So that's why competition breeds a better environment for the average American, the average person who is looking to buy something. If you make it competitive, then price becomes an issue, and people start to worry on price versus you only have this choice. And I think that's always something that's an interesting model. And of course, if you've heard of Jim Chanos, okay, the master short seller on the street, hit a couple of big home runs last week and had his best month ever, I believe, actually being short Grubhub and being short PG&E. Again, very smart guy. And again, it shows you that you don't have to necessarily be short the market. You can be short individual stocks based on how crappy they could be. And of course, I think there's a lot of crap out there right now, which to me is another issue. Okay, Uber, Lyft, all those. Again, not that I don't. My personal opinion is I don't know how Uber and Lyft can make it. Okay, but even if they do, they're right now well overvalued. And I think again, we continue to watch, and I think the crowning blow was WeWork's, and how that guy got away with. That guy walked away with $1 billion of almost what looks like a Bernie Madoff run company. Okay, it seems like it was almost a Ponzi scheme. I can't believe that SoftBank actually got stuck. I don't know how many billions of dollars they got stuck in this thing. But Newman walks away with over $1 billion. Are you kidding me? And I think that is some of the issues that we look at here in today's markets. okay, is that they're trying to rush these IPOs to the street. IPOs today are not what they were, 40 years ago when you had a broker. And the broker would dole out a few to their good customers where you almost automatically made a couple of points. Okay. Now, okay, they try to stick it to you. And I've yet to see, okay, more than a couple of ETFs that have actually gone up after they were issued. Okay. Most get clobbered and go down because they're overvalued to begin with. Okay. Which, if you remember, Facebook did the same thing. Facebook got clobbered originally. Of course, it's turned out to be one hell of a company. LinkedIn did the same thing, turned out to be one hell of a company. So it doesn't mean that these are not going to work out, but they get them so overvalued. And I think that's a bad sign for the banks. It's a bad sign for Wall Street, who run these IPOs. And I think that's always a tragedy as to what they do to the average investor, because who buys that crap is the average guy in the street who's buying these IPOs. So again, more crap from the street, and of course, the harder it is for traders and floor guys to make money, the more bad deals you see that are out there that somehow shade it towards people who can make the money on the inside. So again, I look at it and I go, okay. And again, listen, I'm not the end of the world, but I do see it. Of course, the big story also this week is the prosecutors are asking for a delay in the civil cases against J.P. Morgan. If you're not aware, they were involved in, or their traders were involved in some what they call spoofing in the metals markets, and some of the things they did. And I say, really? I mean, the markets are spoofed every day. Is this something new? Okay, did they do something that was really that illegal? And my opinion is no. Okay, again, I think it's the individual trader, the individual investor, to make the decision if they think that the spoofing or the bid is too high or the offer is too low, if they want to get in. And typically, just a quick education on what happens is there's an old saying that markets go to size. Okay, so typically when you see an unusually large bid for something, what does that really mean? That means that the person or the group that's putting that bid in is really looking to be sellers. Okay, they're looking to sell, so they're putting a big bid in, hoping that the average person will chase that market higher, feeling that they're comfortable with a big bid in the market that they're not going to get hurt on. So they have an easy out if something happens. Of course, what happens is as soon as the group gets short, because that's what they're trying to do, okay, they pull the bid and the markets fall down. I mean, again, I've seen it happen hundreds of times. Okay, and it will continue to happen. And of course, some of the big players have done it for years. So why all of a sudden is it now a problem? And again, I've gotten a million emails about it, and people yell at me that, well, it's criminal. Look, I don't think it's criminal. I think that it is what it is. I think it's spoofing the market. Same thing you would do if you sold your house. Okay, you're not going to say, oh, my house isn't worth as much as I'm trying to sell it for. So I don't know. We'll see what happens. In the meantime, this is Bubba's Bottom Line for Sunday, November the 3rd. And of course, we will step out of here for a break and come back with more after the break. What's up, everybody? We got a new hedging webinar coming on Saturday because our new class was pushed back to the 12th, as we're going to offer an options class that goes along with it as part of a bonus gift for those who come aboard. So in the meantime, if you want to either hear the last one or sign up for the new one, email me at bub@bubbatrading.com. You can sign up for the new one starting tomorrow on the website at bubbatrading.com. And of course, our high school investing program. If you would like to be a part and help us out there, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with yours truly. Welcome back. It is Bubba's Bottom Line. It is Sunday, November the 3rd. And of course, we're winding down and we're in a very bullish time of year now. I know we know last year we had the big meltdown, but again, and I'm not saying we won't have one this year. But again, typically, this is a very bullish time of year. There's about 6 weeks left in the true trading year. Okay. And we saw a lot of that devastation last year came after that period, as it was late and it was thin, because a lot of traders will call it a year. So we've got about 6 weeks left. Basically, the December expiration is basically the end game for most traders. So we'll see. But in the meantime, we had new highs in the Dow. New highs in the S&P, new highs in the NASDAQ. The Dow got very close on Friday. I'm sure this week it punches a new high. The Russell is far away, but could certainly get there. And of course, the transports. So again, we're long, okay, and obviously not unhappy. But again, to me, very tenuous at best. But again, I'm not going to tell you what it's going to do. It's right now. Price says markets are going higher, and who am I to get in the middle or argue with what the markets are telling me? The markets are telling you that the Fed put is underneath the market, that right now nobody's concerned because you've got the VIX once again collapsing. All right, so no volatility means markets are going to drift higher. All right, so we have this dull market drift, okay, that continues to just go up a little bit at a time. All right, now, again, that is the most torturous pattern for traders. Okay, but in the meantime, it's very indicative of what's happening. Okay, low volatility, grind higher. Okay, now again, I expect to see this week probably a sell-off of one day, 200 to 300 points. That is not going to be bearish, I don't believe. I believe that's going to be natural and will actually turn out to be a buying opportunity. Okay, but again, you're getting a little bit overbought here, and there should be some profit taking. But remember, a lot of these fund managers that were sitting on the sidelines all year, afraid of their own shadow, okay, they're going to have to chase some of these performers down. So that could also that's typically what creates the Santa Claus rally anyways. So we'll see how that plays out. But again, I would expect to see higher prices for now. And again, if it changes, of course, we'll tell you because our positions will change. But right now, we've been long, and I see nothing in sight to show me the changes. Again, you had Apple continuing to make new all-time highs, but the others have not participated, so that's always interesting. Okay, and you've got gold. Gold was in a pretty solid downtrend. Okay, and then all of a sudden, about 1480, it found a bottom, made a rally, made a spike, came down, and looked like it was still headed lower. Now we're still short. Okay, but it does now look like there may be bottoms in. Okay, it now looks again right now as of today, 1520 on the upside is our key level to watch. Okay, and we'll see where we go from there. But again, right now we're still short. Although I could make a case now that you might see higher prices. And of course, when our mechanical methods kick in and say it's time to change, then we'll change. But for now, we'll stay short there. And of course, crude oil, you've got, I believe, Saudi Aramco is going to be priced today. I think they're finally going to get it out. I'm not sure, but that's what I'm reading. So we'll see about that. Crude had a huge spike late on Friday. There was some issues going on at a few of the fracking plants. There's obviously this Aramco deal. Again, I don't know what'll happen tonight. I believe that you should most likely see some pressure on oil. We are short oil, but again, I think that the rally was more bogus than anything else. But we'll see. Again, I don't know. We'll see how it plays, and we'll be ready to trade it no matter what it does. Okay, but right now we are short oil. Okay, and we'll obviously stay there. And the bond markets, again, they had some activity and tried to break out, but at the end of the day, ended up coming back down, which means that, is the Fed going to cut rates? I mean, we know they cut a quarter basis point, but how's the market interpreting that? Because at the end of the day, falling Treasury notes and bond prices indicate higher rates. Okay, and I think that mortgage rates have went up for the first time in a long time. Okay, so again, there's some conflicting data here. Okay, in the meantime, we're short the bonds and we'll continue to stay there. Again, everything we do is subject to price, but the price is determined by our proprietary algorithm that will tell us what we're going to do next. And the dollar under an immense amount of pressure. Okay, so again, when you look at the dollar, everybody wants to correlate the dollar to other commodities because most of them are dollar based. But the dollar's gotten absolutely clobbered, and the Fed is doing their best work to print the money and to keep the dollar under pressure. And the other central banks around the world are doing the same thing. Always a problem. In the meantime, again, it looks like it wants to go lower. That should bode well for commodity prices, but it really has not. Okay, Because again, if you look at the commodity, which is the grains, for example, all right, they all look good. Okay, we're long them all, but they've all been basically flat and haven't really moved for 6, 7, 8, 10 days. Okay, basically just kind of in a flat line. If they were a patient on a heart monitor, they'd be dead. And I think that's obviously a concern in a slow market. But again, as long as they can hold the current levels, and I think you look for 920 in beans to hold, you look for 380 in corn to hold, and you look for 505 or $5 in wheat to hold, I think you're in good shape. Okay, again, we're long, but I do think we're going higher here. I think they look really solid and should go higher. And of course, in the meats, cattle meat continues to break to new highs. We wrote Thursday night and we thought that we were going to make new highs. We said 120. Well, we almost got the live cattle, or fat cattle as it's known. It was priced, almost got to 120 on Friday. Okay, and of course, I would not be surprised to see a little bit of pullback to 116 to 118. We're long, and of course, we'll stay there. And the feeders continue to run as well. They look very solid as well, and I think that's something, of course, that does bode with the economy as well. But again, why would I think that I could stop it? A, we're long, but B, the pattern of the price says it wants to go higher. Everybody wants to reach when they see these big moves up. They want to get in. Now again, if you're a short-term trader and you're trading our blow-off method, you take your chance. Okay, you put your stop, and if you're right, great. If you're wrong, you get out and you move on. Okay. But if you're investing, then there'd be no reason to try to short here. Okay, and of course, hogs continuing that downtrend, but they're really holding pretty strong underneath. So they're really in about a $2 range, right underneath resistance. And I would firmly expect them to most likely break out here at some time soon and go higher. We're still short, but again, from my point of view, from looking at the chart, looking at the price action, I would think they're getting ready to break out. So the only good news is that I know that our buy point continues to get lower as the markets consolidate. It gets closer and closer. That's how it works. So again, I think we'll be long eventually, but right now we remain short, and I see obviously no reason to change that. Now, I think when you look at the overall markets, again, very light volume, no volatility, which indicates grinding. Okay, and again, these markets can grind higher longer than anybody can expect. So don't believe that it's going to end. Okay, you can watch the VIX, okay, and know that if the VIX and the equities are both going up at the same time, then the rally is probably over for that moment, okay, or for that day. But still, over the long haul, markets appear that they want to go much higher. And I think they have an opportunity. Obviously, again, you're in the most bullish time of the year, okay? So there's a lot of reasons to believe that there could be much higher prices, okay? Plus all the Fed put and everything else that's going on. And the other big thing is what? There is no place else to go. You remember, okay? Money is looking for a home and where it can create more money. So where can you go? Can you go in the 10-year at 1.5%? Okay. Can you go in a bank at maybe a 1% CD? Or can you go in the market and look at the dividend return? Now again, that's one thing that always pisses me off when I hear the ignorance of the media talking about the dividends. Yes, the S&P 500 I think is about 3.5% return on dividend. However, okay, if the markets collapse, okay, that 3.5% is going to cover your loss of equity. Okay, you buy a bond for $100,000, that $100,000's there, and you get your 1.5%. After the term of your bond, right? So again, the fallacy of the dividend because the market is higher than the 10-year is incorrect, because a sell-off reduces your actual money that you have. Okay, so you have risk to your capital, and of course, risk to the dividend. I mean, actually, the dividends get bigger when the markets go down, because obviously that's how they're function, based on price and based on percentage. So at the end of the day, okay, again, listen, I'm a big fan of the equities and I'm always in, but don't get confused by the media giving you stupid information, telling you that the dividend yield is higher by taking by taking your money in the market, because that does not account for a risk. So if you're 65 years old and you say, oh, I need to get the 3.5%, so you put all your money in at 3.5%, okay, and the market goes down 50%, you just lost 50% of your net cash, Okay, yeah, you got 3.5% dividend, but you lost 50% of your cash. Not a very good deal. Okay, so again, be very careful. Again, media is very tricky, and they want to be and like to fade to the bullish side of the market. So just be very careful when you listen to what they have to say, because if it's any news, it's already priced in the market. And of course, the people that they're having on are either told sometimes what to say, which is why I go on less and less, because I will never do that. And B, because they're most advisors that only make money when your money's in the market. This is Bubba's Bottom Line, Todd Bubba Horowitz. And of course, everybody, we're going to come back with my commentary, but now we're going to take a little bit of a break. So let's step out here. We'll be right back with more of Bubba's Bottom Line. We want to remind you or invite you to our webinar on Saturday, noon Eastern time. We're going to revisit the hedging class because the new class starts November 12th. And we add a bonus into this. The options course will be part of the hedging course. So that will be, cool. You get an extra session of that. And, we want you, if you want to check it out, and if you want to come live, you can come and see it. If you want to see the recording, okay, then you can email me. So email me at bubba@bubbatrading.com if you want the recording. If you want live, you can sign up for it tomorrow at bubbatrading.com. It will be on the website. Okay. And of course, our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And now let's get back to Bubba's Bottom Line and my commentary. Welcome back, everybody. It is Bubba's Bottom Line, and every week I give you something that's pissing me off. And of course, obviously, what easier target is there than the Federal Reserve? Okay. And of course, they did do their quarter-point rate cut. Okay. And of course, Jerome Powell said a lot, and I couldn't understand it. So I guess the immediate thing is the minute you become part of the Fed, you go from a street person to one of these guys who talks in circles and nobody can understand. In the meantime, what he really said is that they may or may not cut rates going into the future. And now, my opinion is there's really no need for rate cuts. In fact, rates should be higher. Okay. And I happen to know some of this information for a fact, and one of which I will share with you is that, even if rates stay lower, banks are not lending, okay? And the Fed is paying banks for money, okay? So their balance sheet is totally whacked out, which again, who's going to pay for that, right? So the whole system is a total mess. And the first thing is they should be audited, okay, which they never are, okay? But the second thing is they should just be ended because it's a ridiculous group of central banks are possibly the worst thing ever. Now, I know there needs to be some clearing base and some agent. We've gone through this in the 1800s, but I think we're much farther than that now, and they need to more let the free markets play out. But when you look at it, okay, and you watch the whole market structure, now think about this. The whole equity market structure was waiting for the Federal Reserve. It had nothing to do with the crappy manufacturing data. It had nothing to do with the crappy Chicago PMI. It had nothing to do with anything. All it had to do with is the Fed going to cut or not? Okay. Now, I know that President Trump has been all over Powell. Okay. Now, again, President Trump happens to be right based on his logic. Okay. His logic is that every other nation is at negative. And if you don't understand how the bond market works, we sell United States bonds, okay, which we are then borrowing that money. Okay. And we're paying that interest rate. Okay. Now, if everybody else is negative, we could go much lower and still be competitive and still draw the capital here, as long as we're on the positive side of the ledger, okay? But I do understand Powell's point, but I think the real point here is if you just let free markets play and forget about letting the fiat currency system destroy your dollars and your currency, because that's really what they're doing. And if you look at the inflation model, which they say there is none, I don't know, I'm paying a lot more for everything. That's all I know. Is I'm paying a lot more for everything I do. So to me, there's plenty of inflation. Now, they're cockeyed math. There isn't, but again, I believe that there is. And I believe that, again, I believe the Fed should be ended or at least audited so we can have a clue because, again, the amount of debt that they're creating, okay, and trying to infuse liquidity, which is then basically only paying banks to do nothing, and the banks are now taking the money to do nothing and buying more bad loans once again. So this whole system is screwed up, okay? And of course, they're worried about the cryptocurrencies because they don't want to stop this gravy train between the Fed, the banks, and the government. So again, I don't know. To me, it's a problem. at the end of the day, I don't know how it's ever going to be solved because, of course, those in office don't want to change that money train. And so we'll see what happens. This is Bubba's Bottom Line, Sunday edition, November the 3rd. Okay. And of course, we got football tonight, and we're still rolling. We're still rolling along, baby. So tonight we got New England at Baltimore. Okay. And tonight we're gonna take the Patriots. How can you not take the Patriots? They've won every game. So we're gonna take the Patriots tonight, and we're gonna lay the 3 points, and we're gonna play it for a little bit better than only the beer and the pizza. Everybody have a great weekend. Everybody, as always, I appreciate you being here, and we'll see you back here tomorrow with Bubba's Daily Update, and of course every week with Bubba's Bottom Line. Have a great day. We'll see you later.